Hi everyone, I'm Dara from bonkers.ie. So fixed rate mortgages have become more and more popular in Ireland in recent years, and Avant Money even recently introduced Ireland's first ever 30-year fixed rate loan. But what exactly is a fixed rate? Should you choose one? And what are the pros and cons of choosing a fixed rate over a variable rate, for example? In this video, we'll take a look at everything you need to know. A fixed rate mortgage is a home loan that has the same interest rate and repayment for an agreed period of time. A variable rate, on the other hand, can be subject to change, meaning that the interest rate and your monthly repayment can go up and down subject to a variety of factors. Fixed rate mortgages have long been popular and common in the rest of Europe and are now very popular in Ireland too. In fact, according to the central bank, over 70% of people in Ireland who take out a mortgage now choose a fixed rate. In Ireland, all lenders offer fixed rates of at least 5 years. However, in recent years, longer term fixed rates have become more common. For example, Finance Ireland and Avant Money have both introduced 15-year and 20-year fixed rates, while Avant Money has even introduced a 30-year fixed rate, meaning you could have the same monthly repayment for the entire length of your mortgage. The main advantage of a fixed rate is that it doesn't increase for a set amount of time. Mortgage repayments tend to be the biggest monthly outgoing for most households, so knowing exactly what you're going to be paying every month for a fixed period of time can bring financial peace of mind, certainty, and really help with budgeting. If you lock yourself into a fixed rate for say 10 or 20 years, there is a chance that interest rates could fall over that time, leaving you stuck paying more than you otherwise would have. Another drawback of a fixed rate mortgage is that you may be hit with penalty fees if you want to increase your monthly repayments at any stage. For example, if you receive a lump sum and want to use it to knock a chunk off your mortgage, you may be charged an additional funding fee for doing so. These fees don't apply to variable rate mortgages. However, some banks now allow you to make an overpayment of up to 10% of your outstanding balance each year without being penalised. This means that while you might be signing up to a 20-year fixed rate mortgage, you can pay it back quicker. You also need to be mindful of breakage fees, which your lender will charge you if you want to switch your mortgage or switch to a variable rate with your existing lender before your fixed rate period has ended. Basically, if you're committing to a fixed rate, it may only be worth it if you're happy to stick to the rate and repayment for the agreed term. Fixed rates, particularly those longer than 5 years, are also usually more expensive than variable rates, as you're paying for the extra costs associated with fixing the payment over a number of years. In general, the longer the fixed term that you choose, the higher the interest rate, so the higher your monthly mortgage repayment will be. Having said that, in Ireland in recent times, some of the best rates on offer have actually been fixed rates, which is unusual by international standards. As a result, fixed rate mortgage holders are getting peace of mind, stability, and better value, so it's unsurprising that more and more people are choosing them. Flexibility is definitely the greatest asset to a variable rate. You don't need to worry about penalties if you want to increase your monthly mortgage repayment, pay off your mortgage early, or switch to another lender. And you could also benefit from falling interest rates if your lender responds to them, of course. Variable rates don't offer stability or predictability, meaning you're at the mercy of changing rates. Yes, your rate might go down over the term of your mortgage, but equally it could go up. Rate changes are difficult to predict, and a lot can happen over a 20 or 30-year mortgage term, so you could be putting yourself in a financially vulnerable position by choosing to go with the variable rate. Whether you choose a fixed rate will ultimately come down to several things, such as the value you place on stability and predictability, whether you think you'll want to increase your monthly repayments at some stage in the near future, whether you think you'll want to pay a lump sum of your mortgage at some stage in the near future, and whether you'll want to switch mortgage at some stage in the near future either. Your mortgage advisor or broker will be able to help you with this decision. So hopefully you now have a better idea of the differences between fixed and variable rates and which might be better for you. And remember, you can compare all fixed rates and variable rates across all lenders on bonkers.ie right now with our mortgage calculator. And if you have any questions or comments, feel free to let us know in the comments below. Thanks for watching.